Okay, so check this out. I was looking at some financial reports and stumbled upon Federal Bank's earnings for the quarter and 9 months ending December 31st, 2024. Actually, it's kind of fascinating.
Oh, really? Federal Bank, huh? That's interesting. What exactly caught your eye in their report? Is it like some big jump in profits or what?
Well, not just the profits. I mean, it's the whole picture, right? We have this document that gives us an independent auditor's review of their financials. And it looks pretty thorough, like they followed all the rules and regulations, which, is always a good sign.
Right, that's crucial, definitely. So, what were the key highlights of this financial deep dive? Did they have any specific areas that performed exceptionally well?
Yeah, so if you look at the income statement, their interest income was pretty solid at about 680,873 lakh for the quarter. And that includes like interest from loans and investments. And total income that was actually up at 772,490 lakh. It's like a steady climb.
Okay, so their core business seems to be doing quite well. That's great. But what about their expenses, right? Because increased revenue doesn't always translate to profit if expenses are also going up. So how did that look?
Actually, their total expenses were around 615,544 lakh, which is, significantly lower than their income. So operating profit, that's actually pretty good at 156,946 lakh before provisions and contingencies. It seems like they're managing cost well.
That's a healthy sign. It means they're not just making money, but also keeping costs in check, right? It's kind of like a well oiled machine. And what about their net profit? That's the bottom line, isn't it?
Exactly. And their net profit after tax was 95,544 lakh for the quarter. Actually, if you compare that to the previous year, it's not that different, but still, it's good they're maintaining similar levels. It's really more about consistency.
Okay, consistency is key. I agree. Now, what about their balance sheet? Did the report highlight anything about their assets, liabilities, and, well, equity?
Well, so their total assets were about 33,990,455 lakh. And the equity share capital is about 49,090 lakh. So that gives you an idea. Oh, and their net worth is at 3,207,705 lakh. So pretty solid. They actually seem pretty solvent, which is good.
Okay, that's very reassuring. Solid assets, good equity. That means they have a strong financial foundation, right? Now, did the report talk about any of their key financial ratios? Things like profitability?
Yes, actually, their capital adequacy ratio, that was around 15.16%. And their return on assets or ROA, that's at about 0.29%. So, I mean, they're meeting regulatory requirements, but there's room for improvement with ROA.
Okay, 15.16% for capital adequacy. That's quite good. But yeah, the ROA could be higher. It's like they're doing fine, but they could be making their assets work harder, right? It's like having a car that you don't drive to its full potential.
Exactly. And another important thing is their earnings per share or EPS, which was 3.89 rupees per share. That's before extraordinary items. So all of this is actually like pretty informative, right?
Right. And it tells us how much each share is earning, which is what investors care about. Now, did the report give any insights into their cash flow or how they're managing their money day to day, that sort of stuff?
Actually, not too much about the cash flow directly, but the report has info about their non-performing assets or NPAs. Gross NPAs were around 455,331 lakh and net NPAs were 113,117 lakh, which, is something to keep an eye on.
Right. NPAs are like the problem loans that banks have, and you always want those to be low, right? They're kind of like a leaky faucet, draining resources. So these percentages, I think, are important to monitor.
Yes, for sure. I mean, gross NPA percentage is at 1.95% and net NPA percentage is about 0.49%. So they're not too high, but definitely you've got to keep those numbers down. It's a balancing act, isn't it?
Definitely. So it looks like they've got a pretty solid operation going and they're managing their finances well. But how are they performing in comparison to like their competitors or the industry standards? Is this good or just average?
Well, the report does not directly compare to competitors, but from what I've gathered, Federal Bank seems to be maintaining a stable financial position. They're sticking to the rules, and that's really key for banks.
Okay, so stability is their strength. Now, what about the future outlook? Did the report mention anything that could impact their earnings going forward? Any catalysts or potential risks?
So actually, the report doesn't talk much about the future, but there's a note about a transition in how they account for investments. It could make some things difficult to compare to previous periods. It's like they changed the measuring stick mid-game.
Okay, that makes sense. So it could introduce some volatility in their reported numbers or make them look different than they actually are. It's like they're using a new recipe for their financial dish. We should also tell the listeners that we are not financial advisors and that they should check with certified experts before taking any investment decisions. I really appreciate your time, Namunive Thop.
Totally agree. Disclaimer, we advise investors to check with certified experts before taking any investment decisions. So now the report mentions they sold their stake in Equirus Capital, which, could impact some of their future earnings.
Oh, that's interesting. So they're restructuring some of their investments and making some strategic moves. I guess, that could be both a risk and an opportunity for them. It depends on how they reinvest those funds.
Right. And there's also some accelerated provision of about 29,162.89 lakh for certain non-performing advances, which shows they're being proactive about managing their loan portfolio.
Okay, proactive management, that's always good. It's like taking care of a garden, weeding out the problems before they take over, right? Now, how do all these segments contribute to their overall performance? Is one area dominating or is it balanced?
Actually, the segment reporting is really detailed, treasury, corporate wholesale banking, and retail banking. They all contribute pretty significantly. Retail banking is the biggest revenue generator, though, and digital banking is, well, growing, I mean.
Okay, so they have multiple revenue streams, which is good. It's like a diverse investment portfolio. You're not relying on just one thing. Now, what about their segment liabilities, like the debts they owe in each segment?
So their segment liabilities pretty much mirror their assets, with a mix of treasury, corporate wholesale, and retail. Retail banking actually has the largest liabilities as well. It's kind of like a financial ecosystem, everything is connected.
That's logical. The bigger your operations, the more liability you'd have. So, finally, what about the capital they have employed in each segment? I mean, are they utilizing their resources efficiently?
Well, the capital employed, it's actually interesting. Treasury has a pretty significant chunk, and corporate wholesale is also pretty high. But then retail actually has a negative capital employed due to high liabilities. I mean, it shows they're getting a lot of funding from retail activities.
Okay, a negative capital employed in retail is interesting. It shows they are leveraging their deposits well and, they're not solely dependent on their own funds. So, bringing everything together, what's your final take on this report?
Well, overall, I think Federal Bank is maintaining a pretty stable financial position. Their core business is generating income, they're managing their expenses and meeting regulatory requirements. There's room for improvement in some areas, but they're pretty solid.
Right. It looks like a cautiously managed bank. And, that has a very balanced growth strategy. Now, before we wrap up, to all the listeners, if you liked what we are saying today, please hit that like button, share with your friends, and make sure you subscribe to our channel. And I mean, what about a quick summary of the financials?
Yeah. So quickly, interest income is strong. Total income is up, net profit is stable, and they are managing their expenses well. NPAs are in check and capital adequacy ratios are good. It seems like they're really focusing on stability and growth, which is good.
Awesome. And as a reminder, this is just a summary based on the earnings reports. Always do your own research and consult experts before making any financial decisions. So, what should people look for in the next report,
Next time, it would be interesting to see how they're dealing with that investment transition. also the impact of those accelerated provisions, and if their ROA sees any improvements. It's all about the ongoing trends.
Well, those are great points to follow. And that's pretty much all we have for today. Thanks everyone for tuning in, and we'll catch you on the next one.
Yeah, thanks for listening, everyone. We hope it was insightful. See you next time.